computer. Okay, and I'll watch attendees coming and going. Okay, it is Tuesday, live with Caeli. Thank you guys for being here. A few minutes, getting started a few minutes late today. I don't know if Carly is going to be able to make it here with us. She is working on it, so if she joins us, great. If not, it's just going to be us. So I am excited to introduce you guys to my friend Kaaren Hall. Just real briefly, Kaaren and I go back, gosh, actually, you know what? I'll give you the funny story. So I don't know if you guys can see her in the attendees list, spelled Kaaren. Kaaren, it's pronounced Kaaren. Her and I go back a ways. We're part of several women's real estate groups and masterminds and things, and we've been on the same circuit for many years, and we'll often show up at some of these events in person and you know, get to chit chat about the industry and stuff. But we have that name thing in common, right? Everybody knows Caeli. Caeli is not how it would be pronounced if you were just looking at it, and she suffers from the same affliction. So her and I probably not a day goes by where we're not having to spell it or pronounce it or explain it in some way or another. Just out of curiosity, so I'm Lisa at Starbucks, maybe Jen if I'm feeling kind of sassy. Do you have a Starbucks name, Kaaren?
Yeah, I'll just use my son's name. I'll just say Mitchell,
Yeah,
like it's a last
done.
name, you know?
Yeah, done.
Yeah.
Easy. That's
Yeah.
funny. Okay, guys. So Miss Kaaren Hall has joined us today. She is from uDirect. She started uDirect kind of, I want to say 0809 during kind of the housing and lending crash.
Right.
I've got a little bio that I'm going to read for Miss Kaaren. And then what we decided to do today is we're going to make this sort of more of an interview type thing of Q&A. We've selected some questions that we're going to ask or that I'm going to ask of her, and she's going to go and just give us the answers, kind of the commonly asked questions, and then we'll open up to you guys questions that you're going to have. But basically, the premise of today is going to be to understand how self-directed IRAs as a retirement asset can be used to purchase real estate. So we'll get into those. She'll unpack that. We like this format better than the PowerPoint. I just feel like that collaboration and back and forth, I think, is better for the audience. So we're going to do that, and you guys will have your opportunity for questions later. So, Miss Kaaren, I already did
No,
it.
there's
I
okay.
already
All
did it.
right, we have
I already did
one.
it one time. Miss Kaaren Hall founded and made a resounding success of uDirect IRA Services at the crash, right after the 0809 crash. She's discovered a strategic way to put her 20 plus years in mortgage banking, real estate, and property management to use. I didn't know property management. That's very cool. Ooh, I've got some questions for you. Okay. The solution was an untapped market for both her skills and for her investors, self-directed IRAs. Through uDirect IRA, she has guided tens of thousands of Americans through the process of diversifying their investments using self-directed IRAs with 1 billion plus, with a B plus, in under management. Learn more about Hall and her thriving company at udirectira.com. Welcome, Miss Kaaren. Thank you for being here.
Thank you, Caeli.
Haha, she got it. She got it. Okay,
No.
so guys, I'm just going to dig right in here and go over. My first question is, are self-directed accounts for everyone?
Wow, I get asked this a lot. I mean, they can be for everyone, but does everyone need one? I mean, here's the thing. If you're going to self-direct your IRA or your retirement savings, what you want to do, you have to first really kind of be an expert on alternative assets, because that's what a self-directed IRA is used for, to take your retirement savings and invest into, like, real estate, precious metals, notes, any kind of alternative asset. So before you are somebody who says, yeah, self-direction is for me, you need to also be the kind of person that understands alternative assets. And I assume that your audience here does.
I would assume that the same thing, yes. Okay, are self-directed accounts new, or do they have to have been around a while to be utilized this way?
Yeah, a lot of people who've never heard about self-directed IRAs, because it still is like a best kept secret, they're just so shocked, like, why do I not know about this, right? But it was Gerald Ford who passed the ERISA laws in 1975. So we're coming up on 50 years of being able to self-direct. So so a lot of people don't know. It's not your fault. It's just not mainstream. But it's available to anybody. Really, as to kind of cover your other question too, is the only barrier to entry here is to have earned income from a job. If you have earned income, or could be maybe if you're flipping houses, you have active income, then you qualify to contribute to a retirement account, and then using it to as a self-directed vehicle. Just depends on the asset that you want to hold.
Well, an earned income from a job could be self-employed too, right? I mean, it doesn't
Of
have to
course.
be, yeah. Just to clarify, and maybe just taking a second, Kaaren, can we just define the difference between self-directed and not, just to give that definition for everyone?
That's a great idea. Yeah. So IRAs are one thing. Okay, it's one thing. If you want to read the IRA rules, you go to irs.gov pub 590, and it talks about how to get the money in, how to get the money out. The difference between a typical IRA and a self-directed IRA is the asset class that bucket would hold. An IRA is a bucket for assets. So if I am a financial advisor and I'm selling you market correlated assets, I literally can't sell you alternative assets or recommend them to you because that's not the area of expertise. So that's why uDirect IRA Services, they're self-directed. You're choosing the asset class. It's not somebody who's got a Series 63, a Series 7 license, a financial advisor, usually telling you to get into alternative assets. So again, IRAs are one thing, and it's either a typical IRA in market correlated assets or a self-directed IRA in non-correlated or alternative assets.
So the self-directed gives them the control, right?
It does,
They get
yeah, it really
manage
does.
the risk. Okay.
Yeah.
Okay, so prohibited transactions. I know that that's a thing when we talk about the self-directed IRAs. How important is it to avoid? Well, why don't we start with a prohibited transaction and defining that, and then making sure how important is it to avoid those?
Right. So when the government created IRAs, they didn't say what you can do. They just said what you can't do. And so you can't invest in, for example, life insurance contracts or collectibles. But then they also created these prohibited transaction rules. And if you're a rule book kind of person and you want to look up these rules, it's the Internal Revenue Code 4975. So IRC 4975, they're all written there. But the purpose is, and the overarching thing is that an IRA or any retirement account is for retirement purposes only. It's not so you can make a bunch of money and use it to pay your mortgage or feed your kids. It's money for later. It's entirely about saving for later. So that's why we have these prohibited transaction rules. You're not allowed to personally benefit from your IRA, and your ascendants and descendants can also not personally benefit from your IRA. In doing so is a prohibited transaction. So I like to say that the self-directed IRA is like a game of keep away from these prohibited transactions if you want to win. So here are some examples. None of these disallowed people can have benefit, indirect benefit, personal benefit, present benefit. So your IRA does not lend money, say, to your spouse to open a business. That would be a disqualified person receiving personal benefit. Your IRA does not invest in like a condo and allow your kids to stay there to go to college, for example, because that would be, again, a disallowed person receiving personal benefit from an IRA-owned asset. So that's one version. Another type of prohibited transaction is offering services to the plan. A lot of people use these IRAs to invest in real estate, so we can use that as an example, but anything where you would personally get involved. So if you own a house in your IRA, you would not go in and do the rehab work yourself. You would not go in and replace the water heater or go in and fix something. You would hire third-party vendors to do the work. So doing the work yourself is it's called an overcontribution of sweat equity. So you hire third-party vendors, they can do the work. So these are some of the prohibited transactions. Because it's complicated, that's why we offer a 20-minute consultation. If you've got a deal, hey, would this fit in a self-directed IRA? You can just hit us up at info@udirectira.com. Tell us about your deal, and we'll let you know if we hear a prohibited transaction in that situation. And I can go a little deeper on this if you like.
Well, I mean, maybe there'll be some specific questions about people that have a scenario that they want to run through. But that was going to be one of my questions is that uDirect is going to give them the advice that leads them, right? You know those rules like the back of your hand, right? You could probably write them yourself based on how much
you do.
Yeah.
But the onus and the responsibility for this is on the account holder not to commit one. We'll do our best to steer you clear, but whether you do or not is entirely on your, it's the account holder's responsibility.
Good point. Yeah. Okay, my next question is what kinds of assets? So can we go into a little bit deeper? What kinds of assets can the IRA invest in? So we got real estate. We know that one for sure.
Yeah. Yeah. And again, the IRS says anything except life insurance contracts and collectibles. So you may come up with some interesting asset class, like maybe racehorses, right? And technically, a racehorse is allowable in a self-directed IRA. It's an asset that you don't have personal use of. And so there you go. But not every custodian will custody the assets. So what you want to do is talk to your self-directed IRA provider and talk about your asset first and make sure they're willing to custody it. So these assets include things like, again, real estate, but in so many different forms. I mean, real estate takes a lot of forms like mobile home parks, self-storage, multifamily, all things we hear about a lot. It's also performing and non-performing debt, buying debt pennies on the dollar. It's also investing in tax liens or maybe raw land. Raw land's kind of cool because if your IRA acquires some raw land, now all expenses of IRA owned assets have to be paid for by the IRA and all proceeds go back in the IRA. But say your IRA buys some raw land, maybe you can rent that land out to a wind farm or to somebody to graze their cattle. There are ways to make money even off of raw land that can be used in a self-directed IRA. So that also works. Cryptocurrency is a thing, a little bit of Wild West, with the cryptocurrency, but it's allowed. And precious metals, as long as they have a certain fineness, otherwise it's considered a collectible. So those are some of the assets that you can invest in.
And Kaaren, it can be diversified among all of those different things if the IRA is got the substantial equity in it to do so, right? I mean, is there a limit to the balance or the diversity that they have in there?
That's right. There's no limit to how many assets you can have in an IRA. And by the way, I should also mention private equity. Private equity is a #1 asset class. And that's like a Reg D offering, Reg A, B, C, or D offering, where someone's raising capital for a deal. But yeah, so yes, to answer your question.
Okay. Can we talk about real estate? There's a few other questions I've got here too, but I know enough to be dangerous about giving advice, self-directed IRAs for real estate. I know that the leverage is going to be a little bit lower than what I think most people expect on a agency or conventional basis, right? You're not getting 80% loan to value within your self-directed IRA. Correct. It's like you can give us that stuff in the terms. In fact, could you just kind of give us an overview on, as their own lender in the self-directed IRA, what do those terms look like? The only other thing that I can speak to about that is that the self-directed IRA, guys, has to be non-recourse, right? You can't have any personal obligation to the debt or guarantee on the debt. It's got to be non-recourse, the funding or the lending that you're going to go get inside the self-directed IRA.
Yeah, absolutely correct. Coming from the lending industry, when I learned that an institution would make a loan to an IRA account, I was pretty surprised, but that's exactly what happened. So an IRA can only take on non-recourse debt, as you mentioned, not Fannie, Freddie, conventional conforming kinds of loans. And the reason is because there is no recourse against an IRA. So those institutions won't lend money to to an IRA directly. But if you get a non-recourse loan, that's a commercial loan. And if you'd like a list of non-recourse lenders, I have a list I will share with you. Again, info at uDirect, and I'll shoot it at udirectira.com. I'll shoot it over to you. But the way it works is that the IRA makes a loan. And as you point out, Caeli, that you're going to have more skin in the game with the IRA, more equity from the IRA coming into the property, and a lower loan amount than you would have if you're buying a property personally. And that's great. So here's what this looks like, because when you take on a loan, and the rates are just a pinch higher than they would be for your personal residence or non-owner occupied property. But then what happens is when your IRA earns income because of debt, it leads to a tax. And this is something we really need to talk about. And if anybody has any specific questions about this whole process, thrilled to answer them. But so say you got a property, it's $100,000. Your IRA comes in with 70. Your IRA borrows 30. And so you've got a 30%, loan to value ratio there, 30% loan. Now here comes a $1,000 rent check. Well, of that $1,000, 300 was earned because of leverage. So it's that $300 that's subject to a tax called UDFI, unrelated debt financed income tax. Super important to know this because it's a factor. And your IRA, you'll be filing a 990T. Your IRA will, pay any UDFI tax that might be due.
Okay, I might need to hear that one again, but
Okay.
for a minute, let's go backwards. I just want to mention to everybody, currently, Ridge Lending is not offering non-recourse. We suspended non-recourse about 4 or 5 months ago, so Kaaren does have a list of lenders. If you're wanting to leverage inside your self-directed IRA that has the non-recourse capability, currently we do not have access, or we're not securing that kind of lending. Maybe I've got a couple other questions. Let's see if anybody else have any questions for Kaaren? Anybody have a scenario that you've done or that you're looking to do within your self-directed IRA asset that we can get the expert to answer for us? Feel free to put them in the chat. I'll be looking, guys, while we're waiting on anybody to pose us some questions. Let's ask this one. Can I co-invest with myself?
Let's think about this. The point is to keep away from prohibited transactions, no self-dealing. There is a ruling, Department of Labor 2000-10, that talks about how it might be possible to co-invest with yourself. So some self-directed IRA companies will say, go ahead and do it. I don't recommend it at all. I wouldn't touch it at all. Because if you got audited, first off, the auditors don't really necessarily understand self-directed IRAs. I've been audited myself, and I know this. So what you'd have to do is prove to an auditor that you had no personal benefit. So if you have taken your personal money, mixed it with your IRA money, and received a check, some sort of proceed, and you got the benefit yourself, you couldn't prove no personal benefit, and you'd have a tough time with that. I wouldn't touch it. I would never, personally, after 17 years in the industry, co-invest with my IRA.
Okay, and burden of proof is the key there, right? Burden of proof is on you, and yeah, gotcha.
It is, and you don't want to have to fight this in court. It's not worth it. Just these dollars, these retirement dollars it's precious money, because it's really hard to save it when you've got caps on how much you can contribute. So you don't want to. I don't think you want to play fast and loose with these dollars. I think you might want to be conservative.
Okay. New legislation. Anything new that we need to know about within self-directed IRA that you can share with us?
And again, in 17 years, it's pretty much been no. It has been the answer, but now it's yes, because one of the things that changed is the RMD age. And that is that when you turn, it used to be 70 and a half, that you are required to take money out at portions at a time from your pre-tax accounts. And what I mean by that is a traditional, a SEP, a simple IRA, or a 401k, you're required to take the distribution. So in 2019, the Secure Act 1.0 passed, and it changed the age from 70 and a half to 72. Then at the age, actually, I should say at the end of 2022, there was Secure Act 2.0 that passed. And that changed the age now to 73, which is great, because if you're 73 and you don't need the money, but you're required to take it out anyway, you're really forced to take a taxable event that you don't want, instead of letting that money stay in there and accumulate. What Secure Act 2.0 also did is it said in 10 years, so in the year 2032, 33, that they're going to raise that age, that RMD age, to 75. And that acknowledges that we're living longer. And so that age is expanding. I think that's really great news for savers. And there's one other thing that's really exciting, and I just wish we could get some support on this. So I'll explain. Secure Act 2.0 said that starting the beginning of this calendar year, 2023, you can make a Roth type contribution to a SEP or simple. Now I'm going to go in the weeds a little bit here, so follow me. But Roth contributions are money that goes into your account after tax. So you paid income tax on the money, then you make the contribution. You don't get a deduction for that contribution. Now, right now, only a Roth IRA or the Roth bucket of a solo K has that benefit, because the money from a Roth comes out tax-free for life, as long as you meet two qualifying conditions, which is being 59 and a half and having a Roth for 5 years. So the government passed this rule and said you can make Roth contributions to a SEP account or a simple, but they have given us no guidance, like how much, what are the conditions, what percentage can be Roth. We just don't know that yet, but just be looking on the horizon to be able to make a contribution to a SEP or a simple. And if you'd like, Caeli, what I'd like to do is talk about the different kinds of account types. Would you like me to go into that?
That was going to be my next question. Yeah, let's do that.
Yeah, because we're kind of, jumping around with a lot of alphabet soup here. So they're IRAs, an individual retirement arrangement for one person. And anyway, it's the government, so it doesn't always follow that. But IRA, traditional IRA, the money goes in before tax. And as long as you don't make too much money, the money comes out and you're taxed on it when you take it out. A Roth IRA, the money goes in after tax and could be tax-free for life. So traditional Roth, then there's the SEP. The SEP is for employers, a simplified employee pension. So this is for a company that even that has employees. Okay, so even if you have employees, you can have a SEP IRA for your employees. And the contribution limit to the SEP is pretty high. It's the lesser of 25% of the income up to a cap of $66,000 a year. And that's really high that's the highest it's ever been for a retirement account. So SEP is something to discuss with your tax advisor when you're looking, you've got a business, even you're a sole prop, and you're saying, how can I save on taxes? Discuss the SEP and the solo 401k with them. I'll get into that in a second. There's also the Simple IRA, which is an acronym. The Savings Incentive Match Plan for Employers. Okay, so it's not simple at all. It's not as good as the SEP, and the SEP sort of replaced the Simple IRA. The Simple IRA does not have as high a contribution limit. So again, it's when you're making the decision, what kind of account do I open? That's when you talk to your tax advisor to find out how you can maximize, your tax advantages. So those are the IRAs, the traditional Roth, SEP, Simple, even a spousal IRA, which is for a non-working spouse, and an inherited IRA. If someone passes away and has a traditional IRA and you're their beneficiary, you would acquire that as an inherited account. It has a lot of different rules. Then we've got the solo 401k. And this is we all have had, probably all of us have had a 401k at work. We know how that works. Well, this is for a self-employed person with no full-time employees in any of the companies that you own. So it's just you, and if your spouse and your co-owners of the company, it could be you and your spouse. So there's a plan, like an umbrella, and the participants under the plan. So it's one plan. You could have you and your spouse as long as you're co-owners. Otherwise, it's just the one person. And the contribution limits are great. It's also a 25% up to 66K, like the SEP. With the solo K, something you can't do with any other kind of retirement account, you can take out a personal loan from that account to do anything you want. Maybe buy a personal home, pay for your kids' education, take a vacation, but you need to pay it back at a market rate over a 5-year period. And if you don't, that's a prohibited transaction. So it's really important that you pay it back. The solo K also has a Roth bucket, so you can have both pre-tax and Roth money in a solo K. So lots and lots of bells and whistles with that solo K for the self-employed person. So now that you've got some idea that there are different account types, take this information, and as you go into probably planning for the next tax year, plan now and discuss this now with your tax advisor. Hey, which one of these is the best thing for my business?
Kaaren, can you, I mean, I don't know that you can get through all of them, but if we look at the traditional and the simple and the Roth, the SEP, the solo, all of that stuff, is there a cheat sheet that kind of delineates what type of individual is best for which one of those buckets? Is it easy enough to say, you know what I mean? Is there,
yeah,
for example, the self-employed person really should be here, or is it so subjective to their individual circumstances that there's no way to?
Yeah, it's subjective, because you really want to see, what your company is. Do you have employees or not? What are your future plans? What's your income? What kind of cash flow are you seeing? How much can you really benefit from this? Because each one even though the SEP and the solo K have the same contribution limits, the calculation to make those contributions is slightly different and could give you an advantage one way or the other. And again, that's something that your tax person would discuss with you. So it really is on a case-by-case basis, but the kinds of accounts that are just for the individual are the traditional and the Roth IRAs.
Okay. So just so that it's clear for everyone, could you outline for us in terms of uDirect and your services, exactly where do you fit into all of this so that they know what your skill sets and services are?
Correct. Well, so when I founded the company, I'd worked for a previous, another company, another self-directed IRA company. And so I came in and I started looking for a trust company custodian to hold the money. And after interviewing several, I came to an agreement. I've worked with the same trust company for 14 years now. We just had our 14th anniversary. So there's uDirect, and then there's the trust company. And what we offer is basically that we're like we're your point of contact from beginning to end. How do you open your account? What are the rules? let me discuss my idea with you. This is what I'm looking to invest in. We're your point of contact. And our trust company acts as a back office doing the cash management. You have access to your account. Once you open an account, you've got a password and ID. You can log in, check it, download your monthly statement every month, save it to your computer. But what we do is give you, all the service and education that you need to facilitate this kind of a retirement plan.
With their own due diligence being forefront to
Yes.
the transactions. Gotcha.
Yes.
I think anything else that would be pertinent in way of education or explanation?
I think, yeah, sure. I think when it comes to due diligence, I mean, I think you really bring up an incredibly important point, because before you even look at a self-directed IRA, you should start with due diligence on the asset. Because the point of having a self-directed IRA is to invest in an asset. So the way you do due diligence, it depends on the asset class. But for example, if it's an SEC kind of an asset, like a large note or a syndication, there are websites that can tell you if you're dealing with a bad actor or not. And we've had situations where account holders didn't do any due diligence, but they came to us. We don't always do this. We're not always this lucky to catch it, but we've been able to do a little due diligence on our end and say, hey, wait a minute, you're dealing with a bad actor. Well, we can't slander someone, right? So we might say that asset is not administratively feasible. But we were able to save a couple of account holders, several of them actually, from investing in a deal that we knew was being run by a bad actor, by saying that the deal was not administratively feasible. Now, that term can mean other things, but it's designed to be vague because of our limitations. And we don't want to call someone a crook when, they may not be. But we have many different kinds of, that we can share with you a list of different websites you can go to, like AARP, FINRA, NASA with an extra A, to check out any kind of bad actor. Just Google them, if nothing else. If you're investing in a house, you would do a title report, obviously, right? But even if you're doing a title report, you got to check it, you check it up front, but check it also before closing. And I'm sure, Caeli, you being in the lending business, you do this with every loan. You need to make sure that the situation's the same day one as it is day 30 when the loan closes, right?
Lots of checks and balances. And a lot of times people get frustrated with that process, that we continue to need updated documents all the way until the funding date, and sometimes even afterwards, to make sure that they're still employed, the income is still there, all that stuff. Yeah. So for sure. Yeah.
All these things are put in place to really protect, the asset, to reduce the risk, but really to protect the individual, so that you don't get into a bad situation, because it definitely happens. We definitely see it, not often, but we definitely see bad actors. So start with your due diligence. Absolutely.
Yeah. I think we've got a few questions. Carly, are you with us?
I am. Hello, everyone.
Hello, my dear. Hey, honey.
Give-
Can you give those to us?
Absolutely. So the first one here is from Marietta. She says, I have a self-directed IRA and with equity trust. It is a traditional account. I have been told that I need to change the account to a Roth to be able to use these funds to use in real estate. Is that correct?
That is a very interesting question, because I think it smacks of misunderstanding. So let's break it down. So if you have, so you have a traditional account. A traditional account is a pre-tax account. You don't have to convert to Roth. You don't have to do that. That's absolutely not true. Converting to Roth is a taxable event. So say, for example, you have $100,000 in your traditional IRA, you convert to Roth, you're going to get a 1099 for $100,000 and pay tax on that, like you earned that income. So I'm sure maybe you misunderstood, because I don't think I don't think they would tell you that. So, or if they did, they didn't mean to. So double check, because that is totally wrong. A traditional IRA, a Roth IRA can equally invest in a real estate asset. No, you don't have to convert. Maybe you want to. Maybe you're going to buy this asset at some killer deal, and you're going to sell it for a giant profit, and you want that profit to be maybe tax-free for life. And so you're willing to pay the tax now on the conversion, because you know that the gain is going to be so much higher later. Or maybe you had a year when you've had some tax losses, and you can cover the taxable event. These are questions for your tax advisor too, about, hey, is it good for me to do a Roth conversion right now? But the answer is, it's not correct. You don't have to convert to Roth.
Awesome. Thank you. All right. We have another one here from Carolyn. She asks, when opening a solo 401k, and you have the income from two separate business entities, one is earned income from a service business and the other is profit from a flip, are you required to have a solo 401k for each business entity in order to make contributions?
Okay, right, great. So let's break this one down too. So a solo 401k has a plan document, and that is that's the rules of the plan. And then you've got participants in the plan. So the plan is going to be sponsored by a company. It could be sponsored by you as a sole proprietor. It could be sponsored by your S Corp, C Corp, LLC. All right. So a company is going to sponsor that plan. So if you have income from, and the other thing too is this plan has got a control group. So it's all the companies you own would be in the same solo K. The solo K would apply to all the companies, but you've got one of those companies is sponsoring it. So I would discuss it with your tax advisor, because I don't know the exact details here, but if your companies that are earning this profit are part of, are in the control group, then all those profits should be able to trickle down as contributions. And so again, you want to work that out with your tax advisor, not just to do it correctly, but to make sure that you're maxing out your contribution correctly and that it's being calculated.
Oh, perfect. Thank you. All right. We have another one here from Teresa. And if anybody else has a question, please pop that right into the chat. So Teresa asks, I have a rollover IRA. Can she withdraw the IRA out and use it to invest or buy properties? She's 3 months from 59 and a half in age. So.
Okay. So a rollover IRA, to me, what that means is that you had the money previously with an employer. It's sitting now in an IRA. And so you don't need to, you can always take the money. It's always yours. When you turn 59 and a half, you can take that money out and it will still be taxed if it's traditional, but there will be no penalty once you turn 59 and a half. Okay. So if you wish to invest in properties, and you use that money in a self-directed IRA, you choose to move it to a self-directed IRA to invest, then the proceeds from those properties will grow tax-free or tax-deferred. So that's something to think about. Now, there's a lot of other things to think about too, because when you're buying real estate, do you have enough in the IRA to, number one, purchase the asset and pay for all the rehab? Because all expenses of the IRA have to be paid for by the IRA. So you need to make sure there's enough money, in your IRA to cover those expenses. Super important. So really do, write down everything, get it on paper in your head before you, pull the trigger on that deal.
Awesome. All right. We have a couple more here. One from Brenda. But if you have a loss on your taxes, you cannot set up a 401k. Is that correct? So could you recap the differences between a self-directed and a solo 401k?
Okay. I don't know if that's exactly true. You can open a solo 401k as long you can only contribute from active income, right? So if your business has always had a loss or suffers a loss 1 year, that year you may not make a contribution. But again, I would discuss it with your tax advisor, because I'm not giving tax advice today, just to be clear, but just to say that you can still invest with the capital you have within a solo K, regardless of the cap of your profit or loss in a business. The profit or loss really only impacts your ability to make a contribution. Did I cover that?
Perfect. Yeah. Thank you so much.
Good.
Yeah.
Okay.
And then we have one here from Dean. He asked, if I bought a rental in a self-directed IRA for, say, $100,000 and I get $1,000 a month in rent, if he's older than 59 and a half, can he pull that rent money out monthly to use as retirement income?
Yes, you absolutely can. So let's talk about this, Dean. So the money is always yours and you can always pull it out. It's whether or not it's subject to tax and penalty. So if you're in this situation, one of the things you need to think about too is when you put real estate in an IRA, because again, all expenses have to be paid for by the IRA, you want to leave a pad in the IRA of about 10% of that property value for the new roof, for the water heater, real estate. I mean, it's always something, right? So leave a pad first. But then, yes, you can always take the money out monthly, quarterly, however you want. But just do yourself a favor and make sure you've got that pad in there for expenses. It's always your money. You can always have it. After 59 and a half, no penalties, but it could be taxable if it's a pre-tax account.
All right, perfect. Thank you. And we have a couple more here. One from Rick. He asks, why should we go with uDirect as opposed to one of your competitors? What differentiates uDirect?
Yeah. Well, quite a few things. I think essentially our fees and our service, our fees are extremely low. It's a $50 setup fee. That's pretty much industry wide. That's a setup fee. And then we have an annual ongoing fee of $275 a month. That's really low. It's regardless of the number of assets and regardless of their value. Some companies have a sliding scale. So the more your account's worth, the more you pay. We don't do that. Some companies will say, hey, look, this is the base. But if you have real estate, then there's an add-on. If you have a note, there's an add-on. If you have metals, there's an add-on. If you have metals with us, we do have a fee for storing that we have to pay a third-party vendor to store the metals, but we don't add on to the annual fee based on the asset class. And our service is great. I mean, you can check us out on Google and look at our reviews. I think you'll be really, really happy with us. We've been going 14 years strong and lots of happy customers.
Perfect. Thank you. And then one last one here from Perla. Is uDirect now able to receive ACH payment deposits, or is that
it's a thorn in my side. It's still in the works. Yeah, it was supposed to happen Q3. Now it's in Q4. But it's being, our IT team is working on it right now, because here's the thing with ACHs, and I'm glad to have a second to talk about it. An ACH, well, let's stop. A wire comes to your bank and it says for further credit to. So here comes the wire into the institution. It says, okay, post it here for further credit to this account. ACH doesn't do that. ACH just comes in and it doesn't say who to give it to. So what it requires is that you email us. I mean, in the olden days, we did this where you would email us and say, hey, an ACH is coming. So we would know where to post this money. Otherwise we wouldn't know. So we've done a lot of work and research, and we're presently implementing, re-implementing the ACH service in a way that's more streamlined, but it's going to be in Q3, which is in a month, sometime in Q3 between now and the year end. That's what our IT team is working on right now.
Perfect.
No, I wish we had it now.
Thank you so much. That's all the questions that we have so far.
Okay. Gosh, great questions. Great questions.
Yeah, this was fantastic. Thank you, Caeli. Kaaren, excellent job. I learned a few things today myself, so this is very valuable. Why not share with everybody how they can reach you directly?
Right. So I think the best way is go on our website. It's the letter U, uDirectIRA.com. And we will answer any question that you have. We will give you a 20-minute free consultation. We're all over social media, like LinkedIn and Facebook and Instagram, and you'll find us all over social media too. But to reach a person who's going to deal with you immediately, it's info@uDirectIRA.com.
Excellent. Caeli, let's go ahead and put that information in the community, please, for everyone to have access. We'll put the links in there. Very valuable information. Appreciate you taking the time. She's all in Big Sky country, guys. She's about ready to go on a hike with her friends. So
yeah,
we'll let you go. Thank you for being with us. Appreciate it very
Thank
much.
you.
And guys, so our next meeting is going to be on the 19th, right, Caeli?
That is correct. Yes.
Okay. So I've got some exciting news I'm going to share. Well, I always get ahead of myself. I'm going to have another guest speaker, Mr. Daniel Pelosio. I've known this gentleman for many, many years, and he is going to have access to share with you all about investing your own cash as lenders for pretty decent returns. I think that I shouldn't say guarantee, but I think upwards of 10%. So for those of you that are currently diversified via real estate, that includes being note holders, where you are investing your own funds, this will be another unique way that you can look at. They have a very competitive niche that he'll be sharing with you. So look for that on the 19th. More details to come. We will mark it to that so you guys will be prepared to join us. And as always, we'll be here on standby. You know how to get us, but ridgelendinggroup.com is our website. info@ridgelendinggroup.com is our email, and 855-74-RIDGE is our toll-free. Call us if you need anything, gang. We'll see you in a couple of weeks. Talk to you soon. Bye, everybody.